If you're thinking about selling your home in Las Vegas or Henderson and you don't want to get surprised or wrecked by some unexpected fees, then this video is for you.
Definitely stick around because we are going to cover what you need to know when selling your home.
Let's get into it.
I'm Vicki.
And I'm Kyle.
And we've helped hundreds of people buy, sell, and invest here in Las Vegas.
And we can help you too. Simply just reach out to us at the information you see on the screen below or in the description.
Let's get into it. If you are not a seller and you are thinking of making a purchase here in Las Vegas, definitely continue watching this video because it will help educate you on both sides of the transaction.
And if you stick around to the end, we're going to share with you this amazing park that we're filming at today. It's got an incredible, one of the best playgrounds here and a bunch of other stuff at it. So stick around to the end and we'll show you where we're at today.
Now, if you are thinking of selling, definitely reach out to us. I'm going to give you a quick recap of the homes we recently sold. Now let's get into it. The first thing on our list is to hire a professional.
Definitely. You don't know what you don't know, so it is crucial in hiring the right agent, and not all agents are built the same, so make sure you contact us and we'll help go over our strategy. But more importantly, we're here to save you time and money and get you the most amount out of your sale. And of course, selling in this current market is not the same as it has been in the last few years. In fact, last year in 2024, less homes sold than had sold in the last 30 years since 1995. And interest rates, as we speak while we're filming this, are almost at 7%. And those factors do play a big part in getting your home sold quickly. So definitely contact us if you want to make sure that you're not wasting time on the market, which is ultimately wasting your money.
Now, another reason why you should absolutely hire a realtor to help you sell your home is that we will create a strategy to help meet all your real estate goals. So if you are looking to purchase a home contingent to the sale of your home, or if you are looking for post-possession, or not even sure what that means, but you may need it, then definitely reach out to us because we can absolutely help you with that. And not only that, we also do extensive marketing. And that's so important because when you are selling your home, you want as many eyes on your home as possible, just in case they may be interested or they may know someone who may be interested in your home. And so that's really important to us to help get our home sold in a timely fashion. And with that comes a lot of marketing in many different ways. It could be social media, it could be online, it could also be within that specific neighborhood. And so we definitely specialize in that. And we also have a large database of clients and past clients who may be interested in purchasing a home that might fit their criteria, and that could be your home. So definitely reach out to us and we would love to not only connect you to our database, but help you sell that home. Now, if you are interested in selling your home for sale by owner, you absolutely can do that, but I definitely would not recommend it. And here are a couple reasons why.
First reason is it's kind of like a part-time job or another second full-time job that you're going to pick up, reviewing documents, dealing with appraisers, dealing with the mortgage lender, dealing with the escrow company. It's if you are literally not a lawyer who is retired, then I probably wouldn't recommend dealing with all the liability. And that brings us to point 2 on our list about trying to sell your home by yourself, is that you are not a subject matter expert. Vicki and I, or your real estate professional, is a subject matter expert, meaning we are allowed to review these legal contracts and documents to make sure that nothing is missed and that you don't find yourself in trouble or in court after the fact. The next thing is, third thing on our list here, is it's been proven over the last 25 years that a home sold for sale by owner will sell for less money than if it was marketed by a real estate sales professional, mainly because over 92% of homes are sold in the MLS. So you would have to get in the MLS, and there's just so many more factors. It's not just being in the MLS, it's how you are presented on that MLS. And that's what we are absolute experts at doing, is making sure your home is represented the best. Another thing that's been proven in the last 25 years through the data from NAR is that also for sale by owner homes often sit on the market for a longer period of time. So if you want your home to sit longer, then go ahead and sell it for yourself. If you want it to sell faster, then hire a professional like us. The third big thing on our list today is going to be the due diligence period. What that means is the buyer has a period of time, and the most common one here in Nevada is about 10 days. It can be changed in the contract, but usually it's about 10 days. Now, during this period, this is when the buyer is going to be able to inspect your home and make sure that everything's working properly. And they could tell you that they want you to fix something during this period of time. They're also going to review the title report, which will show if there's any easements or encroachments on the property that have been recorded to the title. That might sound a little confusing to you, but that's also why you hire a professional, of course. But during this 10 days, I want you to understand that the buyer can cancel for any reason, whether it be inspection, or maybe they just don't like that the neighbor yelled at them when they drove by, or there was a barking dog or something. This is their period to leave the deal and get their deposit back.
Now, another thing Kyle mentioned is that during the due diligence period, it's normally about 10 days. Of course, that can be negotiated, but with certain things, I would call the due diligence period one of your milestones that you go through during the selling process. And a great realtor will let you know before that due diligence period is over, or what your timelines look like, so that way you're completely comfortable and confident every step of the way throughout the transaction, so you can make the ultimate decision and just are fully educated and know exactly when your timeline periods are over.
Yeah, it's super important to know that during this 10 days, this is when the buyer's going to put their deposit down for your house. That's kind of like the collateral if they breach the contract or do you wrong, that you can go after that money. It's usually around 1% of the house. If you got a $500,000 house, it's about $5,000. And so if they mess up or try to cancel after that 10th day, then you would be able to go after that $5,000 or whatever $1,000 deposit that they've put down. Now, remember, if you're going to go jet skiing on vacation, they make you sign a deposit in case anything goes wrong. That's the same thing with your house. You want to make sure that you are compensated if something goes wrong with your sale. If the buyer breaches that contract and does you wrong, you have a little bit of leverage or collateral that you could go after to make sure that you're compensated for your waste of time.
Next on our list is selling in an HOA. Now, if you have seen our previous videos, you most likely have heard us mention that over 75% of homes here in Las Vegas actually reside in an HOA.
That's right. And if your home isn't an HOA, then you're going to have some fees that you need to pay outside of escrow and also at escrow. And one of those fees that escrow will pay for you out of the net proceeds of your sale would be a transfer fee. Many of them have dock fees or transfer fees that escrow will help cut and take care of that money for you at closing. However, there are also two other fees that you will pay outside of escrow that escrow will not pay for you. You actually usually pay those up front out of pocket. And the first one is called a resale package. Now, an HOA resale package or a common interest community resale package is actually required by law to be paid for by the seller and provided to the buyer. Now, this package of information, the resale package, is going to contain information like the use restrictions or the CC&Rs. That's an acronym for covenants, conditions, and restrictions, is basically the rules for the community. And these are important for the buyer to review while purchasing your house because they need to know if they can park their work truck on the street.
Right.
Or some of them have restrictions like you can't have any dogs over 50 pounds. Or
some of those restrictions may include if you can actually rent out that property. So if you are an investor and you're looking to rent out that property, that may not be an option for you. So reviewing these documents is critical just to make sure that they meet all your requirements when purchasing a home.
definitely, that's called a rental restriction. Many HOAs in town actually do have restrictions on your ability to rent your home. So it's important for the buyer to review those. Now, once you've paid for that, the HOA then has 10 days to provide that back to you, your seller's agent. So usually to Vicky and I, and then we provide that to the buyer. And then that buyer, from the moment they receive that package, has 5 days to review it to make sure they are okay with the rules of the community. Also, they're going to be reviewing if your HOA has had some funds mismanagement or if it has litigation or lawsuits against it. They're going to review that and be like, I don't know if I want to live in a community that's being sued all the time. And so this is where they get 5 days to choose whether or not they want to buy your house. And if they quit or if they cancel during those 5 days, this is another opportunity for that buyer to get their deposit back. Now, if they cancel after those 5 days or way after those 5 days, now their money is at risk and you, the seller, would be able to keep that money or at least work towards keeping that money if they canceled after the fact, because they are only given 5 days to review it and approve it. So that's what selling in an HOA is. You're going to have some additional expenses up front, outside of escrow, and at escrow at closing. Now, some of those fees can be negotiated with the buyer, but oftentimes, especially in this market or a more buyer's market, then you're probably going to end up paying for some of these fees. And some of these transfer fees can be $400 or $500, but for the most part, they're usually $200-300.
Now, if that may have been confusing to you at all, definitely reach out to us. We are happy to explain the process to you again in multiple different ways, just so that way you guys are incredibly confident in knowing exactly what step you are taking.
Yes.
Next on our list is protecting yourself from lawsuits.
Definitely. Now, most lawsuits are in the tenant-landlord realm, which isn't going to concern you as a seller. However, the remaining lawsuits typically fall under the umbrella of disclosures. So it's incredibly important that you actually disclose everything properly and accurately when selling your home. And we as agents will help coach you to do so. But the last thing that you want is to be sued after you sell your home and have to pay triple damages for whatever that lawsuit might be about. And so it's crucial that you speak with us to make sure that you're protected when selling your home.
That's so true. Putting yourself at risk is so nerve-wracking. It's the last thing that you want to do. And there are disclosures within the transaction that are some of the most litigated contracts or disclosures within the process. And we never want to put our clients at risk. So it's incredibly important for us to inform them exactly what those are and just explain to them in detail, so that way they know what they're getting themselves into and putting their best foot forward when filling out those disclosures.
Yeah, there was even a client, not one of ours, but from my old brokerage, that had not disclosed, or they said there was nothing wrong with their central air vac system, but they never even had one. And then they ended up going to court and they were found guilty, essentially, and had to provide that client with a $3,400 central air vac system because they didn't disclose it properly. And that form that Vic was mentioning that gets litigated upon all the time is not necessarily very confusing, but it has a lot of data points on it. So it's important that that's filled out correctly so that you stay protected. The next important period that you need to know is the appraisal contingency period.
Now, this is an important period. This is another milestone within your transaction. Now, something to know about the appraisal is that the buyer's lender will order the appraisal. Now, if you have a cash buyer, then they have the option to choose whether or not they do or do not want an appraisal. Now, what's important about this period is that the appraisal price that comes in, now let's say it is above the contract price that the buyer and seller has agreed to. If it's above that price, there's nothing to worry about. We are good to go. Now, the issue comes in when it becomes lower than the contract price. If it comes in lower, there's a few things that may happen. Now, the buyer can come out of pocket to reach that contract price.
That's
And
right. The
they'll have to
lender is
pay.
not going to finance that amount for them, so they do have to pay cash for that. And some of them do not have additional cash to pay that.
That's correct. Now, the buyer can come out of pocket to pay that difference, or the seller can come down and essentially lose X amount of money from the contract price, or it can be negotiated in between. Now, also, this gives the ability of the buyer to cancel and choose not to purchase the home. And it also gives the seller the ability to say, I don't want to sell this home anymore at this lower appraised price.
That's not the price I wanted to sell the home at.
So it's important to have your realtor help either negotiate to help continue the process if that appraisal does come in lower than anticipated. Now, another thing to know is this is another reason why it's so incredibly important to price your home correctly.
Yes. Not only do you want to price your home correctly, but you also have to understand that not every realtor is built the same. And we have some special proprietary techniques that we're not just going to give away, but we use some specific techniques to ensure that your appraised value comes in and that you don't have to deal with this. And that's why it's important to hire us, is we're going to take every measure possible to prevent a low appraisal situation. But going back to what Vic said, it is important to know in the contract today, as it's written, there is an FHA and VA escape clause, which means that if the contract comes in at any price lower than the agreed upon price, the appraised value comes in lower than any of the agreed upon contract price, then those buyers are able to leave the contract without any reproach at all. Now, it's important to note that 4 out of 5 single-family detached homes last month closed with a loan. So that means 80% of our closings on houses are often with a loan. So it's highly probable, or 80% chance, that you are going to experience an appraisal on your property. Now, if you do get lucky enough to find a all-cash buyer, then that would be an instance where you don't have to deal with an appraisal at all. However, it's important to know they still have the contractual right to exercise the appraisal contingency period, whether or not they're paying with cash. So even with a cash buyer, they could still do an appraisal on your property. Just most cash buyers do not end up doing that. So prepare for an appraisal, because it's probably going to happen on your property.
Next on our list, which is also a big milestone, is your loan contingency period.
Now, as a seller, we call them milestones, but if you were a buyer and we were coaching you as a buyer, I call these the parachutes. This is your buyer's parachute to jump off that transactional airplane and escape the deal safe and sound. When they go out of bounds, out of contract, then they're pretty much jumping out of the plane without a parachute at full risk. So this next period is called the loan contingency period. What that means is the buyer's going to write in somewhere between 20 to 25 days, giving their lender, not them, giving their lender 20 to 25 days to make good on that loan. So that buyer's going to try to get as certain as possible on providing all their paperwork to that lender to make sure that they can get this loan and actually close the transaction. Now, if that buyer finds out that they are no longer qualified for that loan and they get issued a loan denial letter, but it happens after the loan contingency period, they are still liable for losing their money. They agreed to make sure their loan was solid during those certain amount of days. Anytime after that, their deposit becomes at risk again, which is great for you, the seller, because if you just spent 25 days and they didn't end up closing on your house, then you should be compensated justly for that. And that's what the loan contingency period is for. Now, if they do find out that they're denied their loan and they're unable to obtain financing, and that happens before the period ends, now they're highly likely to pull that parachute and get that deposit back. So it's important for you to know that this is your third major or fourth major milestone, depending on if you're in an HOA or not, to make sure that your contract's getting more and more solid. So once you've passed due diligence, you're more likely or have a higher probability of it closing. Once you've passed the appraisal, the second milestone, you have an even higher probability of closing. Once you've passed the loan contingency, even higher probability. And if they are in an HOA and they've agreed to the resale package and they're okay with living in the rules of the community, you're even closer to closing. So now at this point, you've made it mostly through the transaction after having passed this many milestones.
Now, again, this is why I say it's so important to know your timelines, and a great professional realtor will help you each milestone and letting you know and keeping track of your deadlines, so that way those earnest money deposits, those timelines are never unaware on your end.
That really alleviates your stress as a seller, knowing where you are in your contract.
Absolutely.
Your transaction.
And also another thing to keep in mind is if you do have a cash buyer, for instance, now, do you need a loan contingency if you're a cash buyer?
Amazing question. So cash buyers will not have a loan contingency at all. They may or may not choose to do their appraisal contingency, but they definitely have no loan contingency. So it's actually easier because you have one less parachute for them to pull when they're buying with cash.
Next on our list are selling expenses.
Definitely probably the most important thing you want to hear about when selling your home. Your largest expense is often going to be the commission for the real estate agents. Now, in some states, the buyer pays the buyer's agent, the seller pays the seller agent. Most of the time here in Nevada, the seller side, or you, the seller, will end up paying both agents. Now, that's completely negotiable, and we are here to help negotiate what we end up paying out to the buyer's agent to make sure you save or keep the most amount of money when you sell. But the first thing is agent commissions for the professional services. The next thing you're going to have that's a large expense is going to be your title insurance policy. In the contract, it states that you will be providing a title insurance policy to make sure that you have a clean title and they can't come after you for mechanics liens or things like that after it's sold. But that usually comes out of a price of around $900 to up to $2,000-$3,000, depending on the cost or value of the house. The most common plan we see is around $1,400, so you can prepare yourself. But with that, you are paying for an owner's title policy. The buyer, if they're getting a loan, is often going to be paying for a lender's title policy. So they have one that they pay for, you have yours that you pay for. The next expense on this list is going to be real property transfer tax. It's called RPTT. Now, what that means is you're going to pay the county when you sell your house. Just like when you pay at the cash register, you're going to have a tax to sell your home. Now, that tax is $510 for every $100,000. So if you have a $200,000 house, you're paying $1,020 in tax. If you have a $400,000 house, then you're paying $2,040 in tax, and so on, if you work that all the way up. The next expense you're going to have could be the next expensive one, but would be your escrow company. The escrow company is going to help transfer the title. They're also called title company. They're going to help transfer the title, issue that title insurance that we discussed a moment ago, and then they're going to allocate all the funds to every party. Like the seller gets their money, the buyer's lender gives them their money. So that's usually around $600 to $700. So that's going to be obviously another expense that'll be paid at closing. The next expense on the list might be your HOA transfer fees. Now, if you have transfer fees in your HOA, then you may end up having to pay some costs to the HOA, go straight to them for doing the paperwork to change ownership within their internal system. And then you're also going to have those expenses we mentioned earlier about selling in an HOA. You're going to have your resale package, and you're going to have the resale demand statement. The demand statement is typically around $180, and that one is often paid up front but can be reimbursed through escrow. It just depends on how it's set up. But that one, you're paying the HOA to create a demand to tell escrow how much money they need. We need $500, $700. Also, if your account is not in good standing with your HOA, meaning you missed some payments and you have back payments, those are going to get rectified at closing with that demand statement. So you have to pay to get a demand to give to escrow to figure out how much to pay. Another thing the demand is going to take care of, which isn't financially related, but if you had maybe a violation like oil stains on your driveway, they may not issue the demand, making you unable to sell your house until you clear your violation, fixing those oil stains or whatever that violation is. So that demand costs are usually around $180, $190. That's going to be another expense that you're going to have at closing. And then beyond that, the rest will be prorations for sewer, recording fees. If you get a mobile notary, you might pay an extra $160 for them to send the notary to you instead of going in office to sign. But those are generally all of the fees that you're going to have when selling your home.
Now, I know that was so much installation, and you're like, okay, let me calculate X, Y, and Z. Now, once you contact us and we do a consultation for you, we can definitely do what's called a net sheet, and it will basically show you how much you are going to net once your home is sold, and it's generally a ballpark figure, so you get an idea of what that number would be rather than feeling nervous to sell your home because you have so many fees you have to pay for. So we can absolutely run a net sheet for you and determine if you sold your home at this price, how much you would net. If you sold your home at this price, how much you would net, so on and so forth. So we can absolutely help you with that. Next on our list is selling with solar.
Now, selling with solar can make things pretty complicated, whether you bought it outright or if it's on a lease, or if it's financed, or if it's a power payment agreement, what we call a PPA. Now, if you did own your panels outright, it's going to be a big benefit to your buyers, but it's important to know that if you spent $50,000 on your panel set, you're not going to be able to increase the price of your home $50,000. It just doesn't work that way. Oftentimes, you're only getting dimes or quarters on that amount, meaning you might get an extra 10,000 out of it or 15,000 out of it. You certainly don't get a dollar for dollar amount back out of that, but it does make your home more desirable to the individuals that are looking to purchase it, because now you can market your home as saying no power bills or low power payments because of paid off solar. Now, where it gets complicated is in the realm of financing, leases, and power payment agreements. Now, if you finance the system and you say you bought that same $50,000 panel set and you've paid down $10,000, that means you have a $40,000 balance. And when they record that, they put a lien on your house, meaning there's an instrument recorded to your house stating that there is an amount of debt or like a credit line out on your house, whether it's leased or financed. And so what that means is you're either going to have to pay that off, which will heavily take money out of your pocket at closing. It's like deducting that $40,000 out of your net proceeds. Or the other option, which we deal with most of the time, is getting the buyer to qualify and be approved to assume and transfer the solar. That way they'll take over the responsibilities and payments, alleviating you from that debt. While the lien still stays on the property, your name's no longer attached to it. It's now the new buyer's responsibility. Now, the reason we bring this up in this video is it can make your home a little bit harder to sell. Some people do not want to assume a solar. Some people don't want solar. But the main thing that makes it problematic is that that buyer needs to qualify for that. So if your home's listed at $500,000 and they are maxed out at $500,000, now they presumably have to finance an additional $40,000 or whatever that solar balance is. If they are unable to finance that additional amount, they're no longer qualified to buy your home anymore. That makes it tougher for buyers to buy your house if they don't have any room that they could be financed. So oftentimes we find that some buyers are approved for the sale and then don't get approved to assume the solar, and then we lose that sale, meaning that you would be losing out on getting your home sold quicker. You now got to find another buyer. You'll have wasted all that time in that transaction, and more importantly, the time that it was taken off the market while it was in escrow.
And Kyle made a really great point. There are some buyers who absolutely love the idea of purchasing a home that already has solar. But on the same token, there are buyers who absolutely do not want to have anything to do with solar. It makes them nervous. They don't really know how to proceed once they realize that the home does have solar. So it's just something important to know when selling your home.
If you do have a lease or financing on your solar panel, the best thing you can do is give all that information up front to the agents so that they can produce that to the buyers that request it. When we have homes with solar, we get tons of calls that are just sound like this, like, hey, I noticed there's solar on XYZ property. Can you tell me how much the balance is? What's the monthly payment? How many years are left on the term? They want to know all the specifics. So having that prepackaged and ready to go for us or your real estate professional is really going to help us be able to actually get your home sold, to determine whether or not that buyer is going to be able to finance that solar payment on top of their mortgage payment.
That's a really great point too, because I want to say that when a buyer's agent reaches out to us to gather that solar information, a lot of times that's before they even showed the home. So all that information is so important for us. And also, wait, time out. It goes back to the point where you said when you're selling your home yourself, that's like a full-time job. And so we're fielding a lot of phone calls as it is just for the solar portion of selling the home.
And to go back to where she was saying, they make that call before they even show the house. So having solar on your home potentially stops buyers from even showing it just by them calling us going, how much is the balance? 50,000? Oh, we're over it. See you later. So you could be potentially losing seller buyers for your sale just by having that, because they're going to call us to dig in. And that's where solar becomes a little bit problematic. So just reach out to us and we do our absolute best to make sure that you could sell your home with or without solar. And now finally, the last thing on our list when selling your home is the walkthrough, signing and wiring. Now, you don't really have to do that, but when you do go do your title signing, or if you have a notary do your title signing, you're going to provide your bank account information if you want that money wired to you, or they'll mail you a check if that's something that you want. But on the buyer's end, we need you to be aware and prepared that they are going to walk through your home, typically within 3 days of closing. And then after they've walked through your home, they're going to go to the title company or deal with a notary to then sign their documents. And then the last thing they'll need to do is at title, they're going to be given the amount of money that they need to bring. It's called cash due at closing. And they're going to bring their cash due at closing to wire that into escrow. Finally, once escrow has everything, then only then will they be able to record the title and your transaction will finally be closed. So it's important to know that that walkthrough at the end is their last parachute, or for us, your last obstacle to get through. Now, most of the times it's the hardest obstacle for them to escape from, or a parachute to pull. And what that means is at the walkthrough, they're going to do two things. One is they're going to verify the property condition to make sure it's still in the agreed upon condition it was when you sold the house. Now, our contract says it needs to be left in broom swept condition. So they're going to be looking to see, one, is it basically clean? And two, was any damage happened to the property during move out? Maybe the movers banged a couch into the wall and that caused a hole in the wall. They could stop the transaction and you won't get your money or close until you fix that hole in the wall. So that's one part of the walkthrough. The second part of the walkthrough is not every scenario, but sometimes during the due diligence that we talked about earlier, their inspection period, if they asked you to fix the leaky sink or the broken handrail, then they're coming back now to verify that the sink was fixed and the handrail is repaired. If they are not, they can pause the transaction or cancel the transaction if it goes past the end of the contract date. So it's important to make sure that the home is left in broom swept condition and that all of your repair obligations have been completed, because that's when you're going to find out if they're satisfactory.
Now, I have a story for you guys. I actually was representing the buyers, and we did our final walkthrough the day before the home was supposed to close. And unfortunately, the seller was not nearly close to moving out. In fact, it looked like he needed at least a week to move out all his items. And he had his U-Haul there in front of the home, and he was just packing that U-Haul by himself. Unfortunately, he said all his friends canceled on him and didn't help. Thankfully, I was there with the lender at the time, and she and I helped move a lot of the boxes so that way our buyer could move in on time and that there were no delays in closing. So the walkthrough is very important. You definitely want to make sure everything on the repair request, if there was one, was completed, and also I do have to add, it's not necessary for the seller to be completely moved out when that walkthrough happens. It just has to be completely emptied prior to
Closing.
At closing.
Right. So, great point to bring across. You do not have to be fully moved out for them to do their walkthrough, but you do have to be fully moved out at the moment of recording when it closes. Unless you have a post-possession agreement to occupy the property after it closes.
Or unless it was specified within the contract. So if that's something that the buyer is specifying and we agree to that during the negotiation process, then absolutely we would want to honor that for the buyer.
And the great part about this is if you pass the wire sign and walk phase, that means they are going to close. Once they record it, within a couple days, you will either be mailed that check with your final net proceeds, or they will wire it directly to your account and you'll finally be paid and you'll be completely removed from the title of the property, eliminating all your liabilities and obligations. Congratulations, you made it.
And now you move on to the next chapter of your life. And even though we are finished with, what we need to do as part of your journey, we absolutely love staying involved in all our clients' lives and staying in touch. And so definitely don't think that that would be the last time you hear from us.
And that's why if you are planning on relocating to somewhere else, let us know, because we can work with that partner in another state to help make your transition even smoother than it could be.
That's right. We actually have sellers who have sold their property here in Las Vegas and are working with other agents. We have an agent currently working with our sellers in Oregon to help them purchase a home. We have an agent in Texas right now working with our clients.
I have one in Utah, Salt Lake City, working with one of my clients,
Yes.
and another one in Fort Worth, Texas.
So we definitely have other agents who can absolutely help you. So we can be a resource for you when it comes to finding amazing agents and other locations as well.
And making that transition as smooth as possible.
So we hope this video was helpful for you guys. If you have any questions at all, I know we went over a lot of terminology that may be confusing, but we tried to simplify it as much as we possibly could. So definitely leave a comment down below if you have any questions, if you want us to reiterate anything, or even contact us, and we're happy to chat.
Don't go away. We're about to show you where this awesome park is.
Thank you guys so much for sticking around to the end of this video. This park is absolutely incredible. This is Huckleberry Park on the northwest side of town. It's amazing. It has so many fun, amazing amenities. In fact, it has a gardens walk, charcoal barbecue grills, a full-size basketball court, a giant field for activities. This park has a pergola, and it has swing sets, 2 playgrounds, and a splash pad. 2 separate dog parks, one for the little dogs and one for the big dogs. And this climbing cube, horseshoe and bocce courts, and tennis courts. Thank you guys so much for sticking around and watching till this very moment. This park is actually Huckleberry Park. It's located in the northwest side of town. So if you want to enjoy all these amenities, take your family here, have a picnic. There's a couple people enjoying picnics right now. It's just such an amazing time. The splash pad is really cool. If you like tennis, there's just so many fun things to do here. So definitely check this park out. It's amazing.